Hello everyone. Today I am going to present ratio analysis on SIYAKA Commodities PLC under the subject Corporate Reporting Practice. This is content, and first of all I would like to introduce me. My name is Gayatri Dharmipal and my registration number is 60. Currently I am a 4th year student on following Higher National Diploma in Accountancy at Advanced Technological Institute, Naivala. And also, I am working as an accounts assistant at AMI Ceylon Engineering Private Limited, Kiribathgoda, where I can gain experience in accounting. This is about my selected company details. Company name SIYAKA Commodities PLC. It is incorporated on 22nd April 1998. Main businesses are tea auctioneering, valuation and specialized warehousing services. Their main shareholder is Lanka Community Brokers Limited, withholding 51% shares. Name of the chairman, Mr. Chandana Elder Silva. Annual report period 1st April to 31st March. Then, by looking this table, we can say that total assets are increased in 2025 up to 4,736 million. Then revenue decreased to 1,170 million. EBITDA also decreased to 428 million. On taxation, it is increased up to 113 million and profit after tax in 2025 is 210 million and 2024 is 209 million. Number of staff 126 employees in 2025 and 97 employees were worked at 2024. Then ratio analysis. Today I focuses on 5 main ratios such as profitability ratio, liquidity ratio, solvency ratio, efficiency ratio and investor valuation ratio. In here first one is profitability ratio. Under that gross profit ratio. Gross profit ratio can be calculated as gross profit divided by revenue into 100%. In 2025, it is about 99.96% and 2024 it is about 99.87%. In here we can see in 2025 ratio is increased by 0.07%. Net profit ratio. Net profit ratio can be calculated as net profit divided by revenue into 100%. In 2025, 18.03% and in 2024, 16.40%. In here also, it is increased by 2% in 2025. Then, second one is liquidity ratio. Under that, current ratio. Current ratio can be calculated as current assets divided by current liabilities. In 2025, 1.22 times and 2024 it is 1.17 times. That means current assets are equal to 1.22 times current liabilities in 2025 and current assets equal to 1.17 times in current liabilities in 2024. Quick ratio. Quick ratio can be calculated as first we have to current assets minus inventory and after that The answer should be divided by current liabilities. In here, in 2025, it is 1.11 times and in 2024, it is 1.117 times. Then third one is efficiency ratio. Under that, inventory turnover ratio. Inventory turnover ratio can be calculated as cost of sales and divided by average inventory. In here, first we have to calculate average inventory. Average inventory can be calculated as the following year inventory plus previous year inventory divided by 2. So that in here 2025 inventory turnover ratio is 0.002 times and in 2024 0.40 times. Total asset turnover ratio. Total asset turnover ratio can be calculated as revenue divided by total assets. In 2025 it is 0.25 and 2024 it is 0.32. That means revenue is equal to 0.25 of total assets and in 2025 and revenue equals to 0.32 total assets in 2024. After that, solvency ratio. In here, debt to equity ratio. Debt to equity ratio can be calculated as total debt divided by shareholders' equity. In here, 2025 0.79 and 2024 0.82. After that, debt ratio. Debt ratio can be calculated as total liabilities divided by total assets. That means 2025 0.67 and also 2024 is 0.67. After that, finally, investor valuation ratios. In here, earning per share can be calculated as profit after tax divided by number of shares. 2025 it is 0.81 and 2024 it is 0.80. Finally, price earning ratio. We call that as PE ratio. PE ratio can be calculated as market price per share divided by earning per share. Here 2025 7.41 times and 2024 it is 5.25 times. Okay. Then we will see recommendations. Profitability ratio. It should diversify revenue sources. The company can increase profitability by offering value-added services such as market intelligence and advisory to earn higher commissions. Then, second one, liquidity ratio. The company should maintain a higher current ratio and it should improve receivables management by reducing the credit period given to clients. Then, solvency ratio. The company should continue to reduce its dependency on debt financing and maintain a healthy debt equity balance, and it should ensure strong interest coverage by improving operating profit. Efficiency ratio. The company should improve asset turnover by generating more revenue from existing assets. Better management of inventory and warehouse capacity will increase efficiently. Investor valuation ratios. Enhancing market transparency and communication will improve investors and share value. Finally, In conclusion, SIYAKA Commodities plc demonstrated resilience and stability during the 2024-25 financial year despite challenging economic and industry conditions. While the company maintained profitability and strengthened its asset base, it faced notable pressures such as decline in revenue, reduced operating margins, external risks including exchange rate fluctuations and policy changes. My presentation is over. Thank you.